Like, hi everyone, I think we'll start. So thank you for joining us today. My name is Sonia Lee and I'm the director of the Canada Climate Law Initiative. I'd like to start by saying that I'm honored to live and work on the unceded and traditional land of the Mohawk Nation. So today we'll discuss about why climate reporting is important for venture exchange issuer. So I'm very pleased to introduce you to Tim Babcock, Vice President and Head of TSX Exchange Venture, who will do the opening remark, and then Dr. Janis Sarra of the Professor of Law at UBC and Principal Co-Investigator will discuss about the current state of climate disclosure, and then Eliza Riego, Director of Project Innovation and ESG Strategy, will talk about the tools that the TMX Group developed. So we'll have time to answer some questions at the end. So feel free to use the Q&A function to ask your question. Thank you, and over to you, Tim.
Excellent. Thank you very much, Sonia. Good morning or afternoon to everyone, and welcome. So with the evolving nature of ESG disclosure, we know how difficult it can be to stay on top of the latest reporting standards and proposed mandates. And that's why we're very happy that everyone here has joined us today. At TMX, we find ourselves concerned with the growing pressure on our TSX Venture Exchange issuers to report on climate-related disclosures and other ESG risks and opportunities. We know this comes at a cost. However, we also feel that reporting on ESG efforts can help venture issuers with visibility and in attracting new investors and capital. Moreover, the strategies that you all employ to mitigate ESG risks and discover ESG opportunities will not only help your companies, but will also improve our planet and society. In this session, we really hope to inform you on what is coming from a reporting perspective, and we'll also highlight the resources that we at TMX offer to support your ESG reporting journey. So with that, to start the conversation, I'm going to hand the floor over to Dr. Janis Sarra, who will walk us through climate reporting implications for TSX Venture Exchange issuers. Thank you, everyone, and enjoy.
Thank you very much, Tim, and good morning, good afternoon, everyone. I'm in British Columbia, and it's a beautiful day here. And I always think of the climate now when we're talking about climate. And as you probably appreciate in the West Coast here, we've had some pretty devastating effects in the last year, including lots of wildfires, a heat dome that killed over 600 people, and of course the atmospheric rivers that killed thousands of animals and destroyed farms. And I'm start with that not to depress anybody, but to really remind us that climate change is very present right across the country. There are many examples. And so the fact that we are going to see regulation around disclosure is because our policymakers and those financing businesses raising capital, using capital, really need to know what businesses are facing. And so the due disclosure requirements are really designed, I think, to try and make that transparent. But I would also say policymakers are spending a lot of trying to figure out how to make it user-friendly as possible for smaller issuers and for venture issuers. So I just want to talk to you really briefly about a few developments. You've probably heard about some of these. You may have heard about all of them. The first is that there's now a proposed national instrument, 51107, disclosure of climate-related matters. That had a consultation period, which is now closed, and policymakers are trying to devise or develop their final policy, expected to be in force by the end of this year. What that means for venture issuers is that, for example, if your financial year end is December 31st, 2022, Non-venture issuers would be expected to start reporting by end of financial year in 2023, and venture issuers have 2 additional years, so not until December 2025. That doesn't mean there's not a responsibility now to disclose climate-related matters. Under the current national instruments for continuous disclosure, if climate risk is material to your business, you already need to disclose that in your financial statements. And so it's important to remember that the previous staff notices have really alerted issuers to the fact that if it's material, you need to disclose it to the market. And they've given guidance talking about the fact that, this is no longer, the climate is now a mainstream business issue. What's different about the new instrument is in terms of, it moves a bit away from materiality in the sense that 2 of the 4 pillars of the framework that's proposed by the Task Force on Climate-Related Financial Disclosures, which I'll call TCFD for short, because it's a mouthful, is that governance of climate-related risks, how the company is managing it, what managers are managing it, what the board of directors or just directors are doing, that's not going to be subject to a materiality assessment. That's going to be required no matter what. Similarly, risk management will have to be disclosed irrespective of materiality. And the reason for that is the understanding that because it's hitting basically all sectors of the economy now, that it's important for the capital markets to know how it's being governed and how risks are being managed. And then strategy and metrics and targets, which are the other 2 pillars of the TCFD framework, will still be subject to a materiality. So that's the proposed national instrument. There are proposed rules in the US, which I'm not going to talk about because there aren't that many venture issuers cross-listed. But if you're interested, the Canada Climate Law Initiative has done a comparison chart of all of the proposed legislation just to sort of see how both Canada and the US line up against the TCFD. The second thing I wanted to mention is, of course, is that many of you are raising capital, not only in the public markets, but with pension funds and obviously, finance debt with banks. And there's new proposed rules for financial institutions federally. And what that means is when they're in place, of course, that financial institutions, the banks who are probably your operating lenders, et cetera, will have to be disclosing finance transactions and both debt and equity financing. And they're going to start tracking their scope 1, 2, and 3 emissions, which means, and their financed emissions, which means they're going to start asking you about your emissions. So the securities law instrument, the reason I didn't mention disclosure of the various emissions is because there's a proposal that it's be done on a comply or explain basis. But the securities regulators also proposed an alternative, which was scope 1 only mandatory, and then the others comply or explain. And then most of the submissions they received argued for scope 1 and scope 2. So I didn't want to confuse you, but I will say that's not quite settled what's going to be in terms of those disclosures, but it probably doesn't matter because if you're trying to borrow money or raise money in the markets, you're probably going to have to know how to measure those. And what's good is that the tools like the greenhouse gas protocol and other tools are getting better and better at helping companies measure. Similarly, if you're a company that has any pension fund investments, there's been an announcement now that pension funds are going to have to start to disclose on a mandatory basis ESG, which means that climate will also become increasingly important for any kind of investment. And we all know the pension funds are significant investors in the Canadian economy. Then the other thing I want to mention just on a regulatory basis before I turn it over is that it is important that the disclosure be accurate, and it is important when one talks about commitments to decarbonize that one doesn't exaggerate what the company is doing. It's often called greenwashing. Sometimes it's called green wishing in the sense that companies in good faith want to do something and they make promises that they can't possibly deliver. And I mention this again because the Competition Bureau in Canada, which is the tribunal that sort of measures all of the textile labeling, food labeling, there are many, many statutes. They have announced that they will really be stepping up enforcement so that commitments that, companies decarbonizing or becoming sustainable are going to be more scrutinized. And so the worst thing to do is nothing, but not far behind that is to not misrepresent what the company is trying to do on climate change. So finally, the Canada Climate Law Initiative is a collaboration of my university, University of British Columbia, and York University, and we have a program across the country with 67 experts from the capital markets, CEOs of venture issuers, accountants, lawyers, etc., who are giving their time for free to offer corporate boards confidential in-camera sessions on how to get started. And Sonia Lee, who's our director and who's moderating this, is in a position to match a business with the right sector and the right person who can come in to give a 30 to 60-minute presentation on really best practices for meeting the changing regulations that are happening in the country. We also have a knowledge hub, and you can go on it and you can click for directors, and you can see the various up-to-date publications by sector. There's one for the retail sector, one for the insurance sector, one coming soon for the real estate sector. And so we're trying to give as much free, accessible, and user-friendly information as we can. And so we invite you to take advantage of this window we have with all of these volunteers giving their time to really, really move the dial on climate change. Thank you very much.
Thanks, Janis. And I'm just going to share my screen because I've included some slides for myself and for everyone to follow along. I think everyone can see that. Hello again, everyone. I'm Eliza Riego. I am responsible for looking at ESG from the perspective of all of our issuers. And I work with a company services team at TMX that's been focused on supporting issuers like yourselves in a couple of different ways. And we heard Dr. Sarra mention the word free. I'm going to use it quite a bit today. So in terms of what we've been trying to do is we've been focused on keeping you informed of relevant ESG news and resources that can affect your businesses, and encourage by providing tools to assist with the voluntary disclosure of ESG topics. Today, what I wanted to do is walk you through how you could use our free services, not only our own, but some others as well, to get started on your ESG reporting journey through those tools. And this is just one path that you can take. Ultimately, it will depend where you are with your company in terms of looking at ESG topics. So I don't think it's lost on anyone the importance of getting your board on board. And as Dr. Sarra mentioned, CCLI, or Canada Climate Law Initiative, provides free board education to issuers, which can help your board get started in understanding the climate-related risks and opportunities. As well, TMX previously reported a short interview in November as part of our ROI from ESG series. And this video provides more insights into the importance of your board understanding ESG topics for your reporting journey. So highly recommend trying to get your board to understand and be involved with your ESG journey. Another critical step for companies is understanding materiality, which you just heard previously as well. So we offer a primer that was updated last in 2020 and still a very relevant source for guiding you in creating a materiality assessment. Investors really want to understand how you created your materiality assessment, and we often see issuers actually include that assessment in their ESG reports, but it's not mandatory that you do. But more importantly, these assessments actually can help venture issuers focus ESG reporting by looking at the issues that are more likely to affect your enterprise value. So 2 free resources that I thought I would mention to look at materiality. One is the SASB Materiality Finder and the MSCI Materiality Map. At the end of this, I will give you some resources like where you can find these things as well. Also, IFRS came out with their exposure drafts, and in there's great questions when you look at things like climate. And this again can help with that focus to understand what are the issues that may be important for your company to think about. Another step that you could take is to attend one of our one-on-one sessions covering ESG disclosure with one of our regional advisors. So we have a program called Growth Accelerator. So it has multiple different types of topics that you can choose from, one of which is ESG disclosure, and you sign up complimentary for a one-on-one session. And we take issuers through who, what, where, why, and how of ESG reporting, including some best practices and great examples from other companies that you might want to consider. Last year alone, we did these sessions either on ESG disclosure or governance sessions with over 670 attendees. So where this is all leading is actually putting pen to paper. And to help you do that, we actually endorsed a free external solution that provides a lot more than just helping you create disclosure. So I'm going to have to walk you through this. This is probably the longest time that I'll spend on any one slide today. Last year, TMX endorsed an ESG reporting repository by IHS Markit, which actually is just going through or finalizing the merger, or the merger is finalized, but they're just doing their integration with S&P Global. So I'm going to refer to it as the S&P ESG reporting repository going forward. And the reason we endorsed it is because we saw multiple benefits that it offered to our issuers. So first, it's a repository that houses as reported data from issuers, any size, big or small. That means that the S&P data clients, those who buy data, can access the data that you actually report as long as it's in the repository. So that makes it very different from rating companies that only offer ratings and scores and sometimes don't look at small cap issuers. So this is really kind of to your benefit. It means that bias may not be added or layered onto whatever you do disclose. The second reason we endorse the platform is that it's global. So any company, private or public, can upload data. And so that means that you can actually then access global peer comparisons, which I'll show you in a second. Also, S&P has global customers that can access your data. So that helps with the distribution of your information. So if you can imagine, if it was only on your website, it would only probably be seen by existing stakeholders or potential stakeholders. Finally, it's free. That's pretty much the number one reason, but it also has very easy ways for issuers to disclose. So it has over 30 of the world's leading frameworks and standards that are set up as online templates. So let me give you an example. If you wish to report to TCFD, one of the frameworks that Dr. Sarra mentioned earlier, you can go into the repository and choose the TCFD template. And so you could choose to work on that online by filling it out. Or you could download the template and work offline. So you can work online or offline. If you worked online, you could have multiple people from your company help you fill it out. And then once it's complete, you can download your answers into Excel and put it on your website. Alternatively, if you choose to work offline, you can fill out the template. Or if you already had an Excel spreadsheet of responses to any standard or framework, you can then upload your answers to the repository. So a lot of flexibility in how you want to create that structured disclosure. And I say structured disclosure, meaning using a standard or an existing framework, because that's what's most valuable to stakeholders, because it creates comparability. And as of today, S&P has made public a new template at TMX's request, because when we had discussions with many small cap issuers like yourselves, we found that even the existing frameworks still presented some barriers or difficulties for companies to respond to. So we created something called the TMX template. And really it is meant to give companies who have not started to report an even simpler way to get started. But let me be very clear. The TMX template is not a new standard or framework. It is just a starting point for those who have not started to report. What it is as I said, is this optional starting place for those who have not started to report. And it has questions that are common across the world's popular frameworks and standards. So the questions align with GRI, SASB, TCFD, and others. They're also more closely aligned with our sectors in the TSX and TSXV landscape. The structure of answering the questions is really easy. You can either choose a multiple choice answer, or it may offer a space to put in a quantifiable response. So that really creates comparability in the responses, because there's no qualitative answers that are being asked. And qualitative, which can be great, it can add context, but it can also add bias by the reader. And it may require multiple resources to review your content before it goes public. So I thought I would actually just take a screenshot to show you what I mean. So on the left, this is just a screenshot of a couple of questions from the TMX template itself. This is taken from the S&P repository. So on the left, you'll see the ESG questions, and you'll see a couple of questions here that you can answer. And you can scroll through the questions to see what they are. So for example, the first question, whether your company maintains an emissions management policy. You can pick your answer. No, yes, and it's public. It's not material. You can pick your answer, and you can add context. You can also decide you just want to skip the answer, the question altogether. You don't have to answer it. In the next question, it's asking for scope 1 emissions. So if you did have that, you could put that in, or you could also choose to say that it will be answered later, or that it's not material. So again, the reason that we created this is to really help our small caps get started. We know it takes time to calculate numbers like scope 1, and this template allows you to tell stakeholders that you're working on getting this information rather than saying nothing at all, which is much worse. All stakeholders want to know that you're on a path, and they want to know where you're at. And it's okay to be very truthful. They're looking for truthful information, not boilerplate language, not greenwashing or greenwishing, which is a term that Janis, Dr. Sarra used earlier. Our hope is that after you answer these questions in the template, that gives your stakeholders some information about where you are, and that you are going to be turning your mind soon to disclosing more. And really, our hope is that you start here, just create that baseline, but then you decide, using other information, what other standards or frameworks you may use in future, which may include the proposed national instrument from the CSA, or looking at the global IFRS standard that may be coming out soon. To give you more context, the ESG repository is a centralized global platform, and currently we have, as of last quarter, we had over 270 of our issuers reporting to the platform. So that means they can also access peer information, not only within TSX or TSXV, but because it's a global platform, you could also see insights from companies, all the companies that are within the repository. So you can filter and look by geography, by industry, by framework, or a combination of all of those. One of the other features within the repository and its capabilities is you can drill down to look at side-by-side comparisons. So in this example, I've got two banks side by side, and you can see ESG field level comparisons. So that already can save you a lot of time as you pick your peers that you want to compare, rather than downloading what they have and going and trying to find, line by line. You can use it. You can use the capabilities within the repository to get you there much faster. Finally, in time, as more of your information goes into the repository and more investors start to use the repository to access data, you'll also be able to see who's not exactly who, but some level of information on who's accessing the data. So you can see by geography, who's looking at your information, what type of company it is, what they've downloaded, how they've searched for your data. These insights are not available if you just simply post your information to your website. And so in this way, the repository helps with that data distribution and again, with insights, and in this case, stakeholder or investor insights. The final resource that I want to mention is one that keeps you up to date with the evolving ESG landscape. And that is our TMX Group ESG 101 platform. So similar to what Dr. Sarra said with CCLI having a resource hub, we too do as well. And so this platform houses events, podcasts, articles, not only from TMX, but also from other ESG experts from around our nation, including CCLI, and it's all issuer relevant ESG topics, like this webinar would have been posted. You can subscribe to also get our newsletter, so the information gets pushed to you every 2 weeks. And finally, I mentioned that I would give you some resources where to get the information. So I've included our main websites for you, as well as email addresses that can help you get to where you want to go, as well as the S&P resources, should you want to use that. So again, to access the reporting repository, the website is www.theesgreporting.com. When you go to do the registration, you should search for your company name and make sure you sign up as a data provider, not a data consumer. And again, I've included their email address should you have any concerns in getting registered for their website. With that, I think we have some time for questions. So Sonia Lee, I'll turn it over to you. I think you're on mute, Sonia Lee.
Yes, I am. My God, even after all these years on Zoom. So thank you, Eliza and Dr. Sarra, for talking about the tools and the current state of climate disclosure. So we received 2 questions. And the first one, I can probably address it to Eliza regarding to the template, but also Dr. Sarra, feel free to add in if you want. So is the ISO involved in ESG standards too?
Beg your pardon, sorry?
Is the ISO involved in ESG standard too?
The
like
ISO.
ISO standard, are they involved in the ESG standards? So I assume it's because ESG, there are many standards, so I'm not exactly sure which standard this person is referring to.
I can start to answer that anyway, if it helps. So the ISO has revised a number of its standards, already existing environmental standards, their environmental management standards, their standard to capture emissions, to try to address specifically the climate aspect of things. They are also working on a future standard. I'm trying to remember the number, but there you can just search the ISO site and search climate, which is going to try to pull together all of the standard information into one document. With respect to ESG more generally, the ISO has announced that it's important future work, and it did put out a discussion paper sometime in the last year saying that this is important future work, and they were going to try to develop standardized reporting. The question I don't know the answer to is, I would hope that they're going to align with everybody else who's sort of merging with the International Sustainability Standards Board. You know, just as the Value Reporting Foundation has and the Climate Disclosure Project, everybody is trying to pull together so that issuers are not left with many different standards. And so that I don't have the answer to, but we're happy to take note. If you drop in a chat to Sonia Lee or an email, we're happy to try and find that out for you.
Thank you. Eliza, did you want to add something to that particular question, or?
No, just again, the same hope that it's more about consolidation and not something net new. I think it's really important that you know, they talk about the alphabet soup for a good reason. One thing that I neglected to say, only because we're talking with venture and it's still hopefully perhaps just early, not hopefully, but perhaps just early days in your reporting, is one other thing that the repository offers is a reporting converter. So if you start down the path of TCFD and you start reporting there, but yet you then want to pivot to another standard or framework, so something new comes out, it offers this converter where it illustrates how it may map from one standard or framework to another. It doesn't do it for you, it just highlights where that overlap may be. But again, let's hope there's more consolidation than further fragmentation.
All right, thank you. And then the second question is, someone is asking, if we have chosen to offset our emission in certain scope, can we put 0 as our consumption? Again, I think probably both of you can answer that question.
So have we
if the company has chosen to offset their emission in certain scope, can they put 0 as their emission, not probably in emission and not consumption? Like how much they emit?
Right. I actually don't know the technical aspect of whether or not you would say that, but I would expect that you would give that context.
Yes, I mean, sorry, if you weren't finished, go ahead, Eliza.
No, I was going to ask you if you had a better answer.
Yeah, I mean, I think it's, I think the way the regulations are shaping up, you know, for example, in the US, the Securities and Exchange Commission has said you need to separate it out completely from your decarbonizing. You can disclose it, but you have to really show how you're also decarbonizing. I don't think the Canadian regulators have settled on it yet, but there's no question that you would have to be as transparent as possible. So in other words, disclose the emissions, disclose the fact that you're trying to deal with this to offset. But I can say that the writing's on the wall that that's not going to be good enough for companies, that there is going to have to be a path towards decarbonization.
Thank you, Janis, for this answer, and Eliza. And so we have another question, and probably this one is for Janis as well. So you spoke about greenwashing and the importance of issuer being accurate. So do you see a future where reporting issuers will need annual climate carbon auditing, where the climate disclosure will require external verification?
So it's a really excellent question, because right now the proposed national instrument is going to require reporting in either the AI annual information form or the management disclosure and analysis, one of which is already third-party verified and the other isn't, which is something that the Association of Actuaries and Accountants has raised with regulators. There's no question there's an effort to try to embed it already in some sort of external verification, not by climate experts, but just to say, have you actually turned your mind to the financials? So just as when you do annual auditing, they're not drilling down completely, what they're looking at is the integrity of your financials, and they're signing off on a higher, less level than a complete, I guess, a complete audit. So the short answer is not at the moment, but likely to come in some way. The only question will be, really, different jurisdictions across the world are trying to make very careful decisions about what's being asked of larger issuers versus venture issuers. And I would say that our securities regulators are at that very moment as well, trying to figure out the degree to which they're going to require external verification.
Thank you. Eliza, do you want to add something to this question?
No, but if I'm not mistaken, well, if I'm not mistaken, I think it was one of the questions that was asked in the proposed mandate as well, and so hopefully people did respond with comment letters, you know, depending on their perspective, whether or not assurance was required.
Right, and so we have like this other question is still related to that question and what we touch upon about like when is the effective date that venture issuers will be required to report on ESG's disclosure. As you mentioned, it's a bit different than other issuers, but I don't know if you want to add anything else, Janis, to this question or.
Well, in case the listener wasn't there for my part of it, if the national instrument, if the final version of the national instrument is brought into force this year, then it will be, and it will be the financial year end of December 31st, 2025. But that's not to say, one has to pay careful attention also to, the ISSB, of course, is a creation of the International Financial Reporting Standards, or IFRS. And if your company reports to IFRS and that standard, that exposure draft comes into play, the timing could be slightly different. So that's one of those situations. Stay tuned. But the final thing I'll say, and I'll emphasize it again, if it's material, you just already have to report it.
And regarding to this question as well, so how many ESG materials topics will be required for reporting in 2025 beyond GHG emission that like you both discussed? Like in the tools that you show Eliza, there's like the GHG emission, but what other topics will be required to report?
So I think there's a difference between like whether or not there is a mandate, right? Like right now, there is no mandate that, we would say, here's what you have to do. However, there was the CSA proposed mandate. And so whether or not that comes into effect and when will depend. And so I think it's probably incumbent on the companies to look at what the initial proposal was, if you want to get a sense of what you may need to be prepared for, as well as the IFRS exposure drafts as well, one on climate and the other on general. But the template that I spoke about is really just a starting place. It is voluntary, like nobody's asking you for this, but your stakeholders, if they aren't already, they will be. And if you're saying, well, my investors aren't asking, well, what about those that are currently not investing? And when we surveyed investors, they want information from all companies, large cap, small cap. If you're not being asked by investors, you're probably part of a supply chain. You're going to be asked. Dr. Sarra talked about financial institutions looking for that information of their constituents as well. So this is coming, but to give you the exact number, I can't give you that number. I mean, SASB has, when now that's combined with IFRS, but they had a certain amount of questions per industry, but it's not as prescriptive yet. Did I maybe, Dr. Sarra, you want to elaborate on that?
No, I think you're absolutely accurate. I will say that as a very beginning, the draft for securities law, so this is not for investors in TMX and others, but for securities law purposes, there are 2 draft forms, and currently it's under the questions being asked are under the TCFD framework. What is your governance? What is your risk management? What is your strategy? And are you measuring? Have you set targets, and are you measuring them, and to what standard? So it's a pretty simplified few questions to start, but that is very much just the starting point, I think.
Thank you. And so you both presented like 3 tools that are available on the TMX website, but also on the CCLI website, particularly for boards of directors. Someone is asking if there's like a kind of like one-pager template that would be a starting point for annual reporting. And Eliza, you discussed about the tools that the TMX Group developed. I don't know if you want to elaborate on this. And also, companies can sign up for ESG disclosure one-on-one sessions. So how can they do that? Is it free? Just give more information for the participant to start.
Sure. So we have one page that houses, explains all of our tools. It still will refer to the repository as the IHS market repository, but it's being remarketed as SMP. We just haven't made the change yet. So it's tsx.com/ESG management. So you'll find all the references to all the tools that I mentioned there, including ESG 101, which is that resource hub. If you have any questions, you can send, as an issuer, send them to issuer.services@tmx.com. So I don't know if maybe I want to share that again. And the other thing I was going to maybe suggest is what I don't have on the websites though, although I'm pretty sure the links are on ESG 101, but is the links to the IFRS exposure drafts, as well as the CSA proposed mandate. I'm not sure if those are something that you have on your website, but I can certainly try and follow up and find those, but anybody could also search them online.
Thank you. Dr. Sarra, did you want to add anything else? No? Great. Thank you so much. I don't think we have other question. Oh, great. Thank you. So we just copy paste all the information in the chat. So thank you so much, Eliza and Dr. Sarra, for discussing climate reporting for venture issuers. So all the resources on the TMX website. CCLI also has many resources, as Dr. Sarra mentioned, on our Knowledge Hub, and we offer a free board presentation. You can always contact me. I will put my email in the chat. So thank you, everyone. I wish you a great afternoon.
Thank you.
Bye-bye.
Thank you very much.